How to capitalize on Bitcoin's recent surge. This is PrimeBlock Capital's strategy breakdown. Bitcoin's just hit $97,000, and for smart, disciplined investors, this could be the biggest opportunity of the decade. I'm Funcho Ajibade, founder of PrimeBlock Capital, and in today's video, I'll break down exactly how to position yourself to capitalize on this surge. We're going to be covering macro trends, institutional flows, key technical levels, and most importantly, actionable strategies that you can employ right now to maximize gains and manage risk. So let's dive in. Macro trends and why Bitcoin is surging. Global markets, news headlines, Bloomberg, you name it. First, let's talk about the macro backdrop driving Bitcoin's price action. We've got global inflation, which remains elevated. And while central banks like the Federal Reserve are cautious, there are early signs of easing monetary policy. Now, what does that mean? Well, risk on assets like Bitcoin become more attractive as liquidity returns to the markets. So Raoul Pal, who is a leading macro analyst, has been very vocal on this and did a fantastic presentation recently. He's emphasizing that global macro markets are more interconnected than ever. And these shifts can both fuel rallies and also cause sharp corrections. Bottom line, the macro stage is set for Bitcoin's strength, but tactical positioning is key to ride the wave safely. Next up is institutional demand and on-chain signals. So if you look at Tesla, MicroStrategy, a lot of the big wallet addresses that whales are holding, and a lot of the data on CoinMarketCap, what you want to look at here is the key driver behind Bitcoin's surge. So major players like Tesla, MicroStrategy are not just holding their Bitcoin, they're accumulating more. We're seeing this with institutions as well. Smaller hedge funds are quietly following suit, and they're positioning Bitcoin as a macro hedge. Now, on-chain data confirms this. I mean, according to CoinMarketCap, large wallet activity is surging. It's showing long-term conviction from serious players. And we've also got people like Rect Capital, one of the top analysts on X. He's pointed out that Bitcoin's moving averages continue to support that upwards momentum, but the RSI is nearing overbought levels. The translation for that is the long-term trend is bullish, but smart investors should scale in rather than dive in all at once. Okay, so technical levels and key market dynamics. Let's get into these technicals because knowing your levels is crucial right now. Bitcoin has broken key resistance at that 80K level, surged past 90K, and new support is forming between that kind of 88 and 90K territory. And the next key resistance is at that magic 100K level. Now, the RSI and MACD both show strong bullish momentum, but they're also flashing some overbought signals. So what's the smart move here? Don't chase pumps. Firstly, wait for support retests at that kind of 90K or lower level to be able to scale in, and use dollar cost averaging to spread your entries and also reduce risk. You can see on the chart here how we are on the cusp of potentially breaking out. But we also need to be aware of the fact that we might not and start heading down to that next support level. So if we do break above this white line, then I would expect us to come back to retest that as a level of support before then breaking through that 100K level and taking us to the next level. Okay, so let's talk about the risks and how to manage them. If you look at regulatory headlines that have been out recently, people talking about market crashes, people like Henrik Seberg, fantastic analyst on X. No bull run comes without risks, and being aware of them is what separates professional investors from retail. Okay, so the key risks right now include macro shocks, that sudden shift in central bank policy or inflation data. It can affect things. Regulatory surprises, especially from the US or the EU, and also sudden capital reversals, profit taking from institutions, for example. Now, Henrik Seberg, another respected macro voice, has been warning about these risks. And here's how we advise managing them at PrimeBlock Capital. Okay, number one, maintain diversification across quality assets. Number two, always use dollar cost averaging, not lump sums. Number three, set tactical stop losses where appropriate if you are trading. If it's long-term investment, we're not interested in stop losses here. It's all about long-term accumulation. Think a decade or further ahead. And then also stay updated on macro indicators weekly. It's important to be on top of what's happening in the world, because what happens in the world affects what happens in crypto. Right, so what's PrimeBlock's strategic advice at the moment? We're recommending diversifying across institutional grade assets like Bitcoin, Ethereum, and some select blue chip alts as well, using accumulation strategies during dips, following macro signals from trusted analysts and technical confirmation. Okay. The other thing is staying patient. Too many people want to get rich overnight, okay, because long-term gains come from holding through cycles. Now, if you're looking for tailored strategies for your portfolio, you can reach out to our team directly. We're happy to help you build a customized plan. And the easiest way for you to contact us is to join our free WhatsApp Crypto Insights Hub. The link is in the description. It's completely free to join. We share quality information, news, insights, and strategies. You get to speak to me directly, the rest of the team, and more importantly, get to form that community bond with like-minded investors that have all been in crypto for many years. I've been here for over 8 years myself. But appreciate you tuning in to watch the video. Hope you all have a fantastic day ahead and stay sharp out there, guys.